The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. Quite the acceleration yesterday, man. You had some high flyers, right? Jumping back to Microsoft as we kick off the program. This morning, you're going to be up by about another $2 as the market is in positive territory. We have the S&Ps up by 2. Microsoft yesterday charging higher by more than $20, man, to 366. This morning, we're at 361. Back to the S&Ps, you see the acceleration yesterday. We had many stocks accelerating higher. How about Netflix yesterday, right? Ahead of their numbers coming out after the bell tonight. Investors getting in on that stock up $25 yesterday, man, to $475. Today, you're up another $5. We were almost at $485. This market, man, relentless. S&Ps up by 2 points at $45.90. Folks, we're only about 200 points. Only 200 points from all-time highs in the S&P. How about the NASDAQ 100? Makes it above 16,000 last night. We're trading right now at 16,011, up 35 points. We closed actually just under that 16,000 price mark. Boy, big picture, right? I mean, how many people had that we get it all back in the first 7 or 8 months of this year? As in, you talk about a rip-roaring pullback from almost 17,000 down to a low of 10,746. The NASDAQ 100 has now risen. What is that? 5,254 points. 5,254 points. You're talking about 50% almost, right? Crazy numbers, man. As we're at 16,000, you're only 700 points away from the NASDAQ, man. And for some context there, when you put it on a weekly, last week we were up 800 points. So we are like approaching all-time highs, actually reachable on a weekly basis. You get some rip-roaring rallies, okay, and don't think it can't happen. We saw it happen yesterday. We saw it happen last week. 4808 is the price tag on the S&P. We're trading right now just under 4,600. Dow up 13 points. You got the Russell right now negative by 1. We got some companies out with their numbers. You got Carvana with some action today. We'll jump over in a moment. Crude up 32 pennies right now, trading at 75.97. We're going to talk to our man Kevin Hinks coming up after the first break. We'll talk to our man Teddy Kegstad from the Tiger Forex Report. We talked to him at 40 past the hour. We'll talk some Forex. We'll take a look at the dollar index. We'll talk about the euro, the yen. We always talk a little bit of commodities, crude oil as well. Crude up 34 pennies at $76 right now. We jump over to gold. Flat at 1981. It's been a run for gold to the upside recently. Dollar index up 23 ticks, back above 100. Seems like we're basing around that 100 price point, right? 117 right now on the dollar index. As dollar weakness continues, you jump over to yields. 10-year continuing higher price, lower yield. 10-year yield 3.76%. We got a little bit of a reprieve yesterday in terms of some negative action. But just like that, we were just testing those highs again as we're sitting at 112.30. So you're almost at 113 essentially. And we were just at 110 less than 2 weeks ago on that 10-year. Dramatic reversal for higher price, lower yield. And what has that done? We have higher price and lower yield. That's added to the weakness in the dollar index. The market has liked a weak dollar. They've taken that and they've ran with it. And some of the tech stocks in the AI run is just continuing, man. Pretty remarkable when you look at Microsoft, okay? I was talking about yesterday early in the day, putting it back on a 5-minute chart. This news comes out at about 11:30, so I was on the air at 10 o'clock. And yeah, we got to be over that price point now in terms of Microsoft was already almost $1 trillion. So you are at $219.35 this year, so call it $220. We're trading at $361. Call it just $360. That's $140. You jump over to the Analyze tab. This company has 7.5 billion shares outstanding, 7.435 to be exact. Let's do it out. Yeah, over $1 billion, 1.04 billion, 7.435 billion shares times the $140 that you're trading higher. Microsoft has now added $1 trillion to its market cap as of January 6th. It is remarkable, man. We didn't even have $1 trillion company. And what's that putting this at? Yeah, 2.7. We're at 2.7, man. Microsoft on the chase for Apple. Remarkable action, and we'll talk about this one as well. My dad was talking about it in his program last night. You know, we use Microsoft 365. It's an outstanding suite of products when you add them all together, especially when you combine them for business. And I was thinking about it last night, just talking to even people in my household saying, you know, they're going to be charging $30 essentially for the product. What's it called? AI Copilot or something like that. We'll pull it up. But what's remarkable is that you think about it, $30, is that about an hourly wage for a decent job? I mean, what if you're that's making 55, 60, an hourly wage for somewhat entry level job of some capacity? Not entry level, I guess, $30, but you get the point. That's an hourly wage for somebody working an office job with some type of experience, maybe in their 30s or 40s. Point being, their AI assistant can probably double the output or productivity of an employee. And if it can double the output, maybe it can multiply it times 4. For certain jobs, it's going to do everything, right? So imagine you're paying one hourly wage for the ability to basically double the productivity of every worker that's using it, essentially. I mean, they're, you know, let alone the people who are making far more than $30 an hour, okay? And it's doubling their productivity in the same way. So it's going to be interesting, man, where this thing goes. But yeah, $1 trillion of market cap added. So expectations high, to put it lightly. You back up Microsoft, and you're talking about all-time highs from Microsoft, well above where we were coming into 2021. And look at that 618, right? You got to love it. To the tick almost on the 618. That pullback from Microsoft, you make that low of 215. And if this is an A to B, C to D, folks, you got an A point of about 130. You got a B point of about 350. It's at 230. 230 brings you to 455, right? Because that is a leg. Yeah, that's a 200. Look at that A to B leg. Yeah, 130, 220. Excuse me, 220. Yeah, 220 of 220. Yeah, 445. It's like 100 points above where we're at right now. Wild stuff, man. Let's jump over to Apple shares. Well above the highs as well. Apple flat this morning. They had quite the acceleration yesterday on that news as well, as the market just crushed higher to 194.33. Trading right now 193.51. So we jump over to the equities with earnings. Goldman Sachs with their numbers disappointing a bit, off about $4. Saw something, return on equity, lowest of the banks at about 4%. Nonetheless, Goldman off about $4 right now. And on the flip side of that, how about Carvana, man? CVNA. Carvana shares, they restructure their debt. They take about $1.2 billion of debt off the books. They're going to the public with some shares to shore up their balance sheet. They increase the duration of some of that debt as well to free up some free cash flow. They have the backing of their creditors, and this thing is going to open literally right to the tick of that spike high of last August. Boy, you talk about getting it back, man. The NASDAQ 100 almost got it all back for that pullback. And we have Carvana. Now, that is not the high, okay? The high is 376, but on a relative basis, getting back to $58, man. Pretty remarkable. Carvana trading higher. Stay tuned, folks. We're coming back with our man Kevin Hinks from Fast Market TD Ameritrade Network. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Market session highs climbing up to the highs we had yesterday before a little pullback on the close. Right now we're positive by 6 points. You got all the markets in the green. You got the NASDAQ 100 up by 39, charging higher. Dow up by 47. The Russell up by 3. Check it out, right? Crude trading higher as well, up 52 pennies at 76.18. And jump it back. So some of the numbers. Goldman profit tumbles on real estate hits and deal-making slump. Return on equity, there it is, 4%. Worst among the top U.S. banks. Investment banking fees miss estimates as merger fees slide. Cutting on those fees across the board. Check it out. Second quarter, year-over-year change. How about a dip of 58%? Second quarter earnings fell 58%. On an investment banking slump, real estate markdowns, and a goodwill write-down in the consumer business, which houses the Green Sky lending business. 4% is the return on equity, the lowest among the top U.S. banks. They had been actively tamping down expectations. Yeah, this is probably going to link to the Goldman article. Yeah, this one was out a week ago. 7 days ago. I think we might have talked about this on the program here in terms of breaking its own rule to flag results much worse than rivals. So they were tamping it down. They were trying to give themselves the lowest expectations possible. And still they come under, and they're trading a little bit lower prior to the open. Equity trading revenue was one bright spot, $3 billion, compared with an estimate of 2.47. So equity trading revenue is where Goldman beat. Asset and wealth management business, 3.05. Market was looking for 3.5. Percentage-wise, quite a miss, right? The unit was buffeted by the bank's exposure to the real estate sector with write-downs both on its lending portfolio and equity investments, contributing to a $1.15 billion pre-tax earnings hit tied to principal investments. Interesting what's happening across the board with real estate, right? Fixed income, just under the numbers they were looking for, 2.71 versus 2.81 expected. Investment banking revenue, 1.43 versus 1.51. Revenue dropped 8% to $10.9 billion. Market was looking for 10.5, so not bad. A little bit of a mixed story, but a miss nonetheless. You jump over to Goldman shares, and you're down about $3 on those numbers. But check it out. Not really that not really that dramatic of a change when you think about where it was just yesterday. I mean, you opened yesterday at 328. And you back this up, you see the chop around at 327. But as they said, a little bit of a different story, man. You take a look at a chart like Goldman Sachs, right? Look at Morgan Stanley. Pretty close. Look at those charts. You back it up just on 3 years. JP Morgan, steeper pullback, steeper acceleration, but all those banks still well off the lows of where you were trading at in 2021. Yeah, pretty remarkable when you think about it. Interest income, they were supposed to make all the money, but guess what? We reached a point where rates went up so quickly that it forced consumers to wake up. It was a different story. They always say, this time it's different, right? This time it's different. This time it was different, man. People woke up because the change was so radical that, yeah, you got to pay people for deposits, man. If you have any type of cash just sitting around, do yourself a favor. You know, make sure you go put it in an account that's getting some interest, man. Even if you're talking about going into an interest-bearing money market account, okay, or you're buying 3-year CDs, you're buying a year CD and you're laddering it. If you really have investment income, you don't want in the market. It's been quite a run right now, folks, okay? If you're not willing to take a little bit of volatility, I feel like I should remind you, over 4 months, we just traded from 38.35 to 4,600 in the S&Ps. What is that, 600, 700, 765 points? Yeah, that's 20% in the S&Ps. You're up in 4 months. There's 5-year ladders that are pushing you close to almost 5% still, which is pretty remarkable when you look at that on a risk basis. Because as we do near the end of this hiking cycle, you may see some of those yields go away in terms of being at 5%. The banks are going to need some equity for a while, so CDs should be around. But we're at some serious numbers for risk-free rates of return, even at these market numbers. All right, let's talk. What are we going to talk? Yeah, let's talk some Carvana, man. Carvana soars after reaching debt restructuring deal. Bondholder deal extends maturities, cuts debt by $1.2 billion. They're going to file to sell up to, they have filed to sell up to $1 billion in shares. The agreement with bondholders announced Wednesday is going to eliminate 83% of the 2025 and 2027 unsecured note maturities. It's going to lower required cash interest expense by $430 million a year for the next 2 years. Cash flow, right? And they're going to, they expect to reduce its total debt by more than $1.2 billion. That deal is supported by Apollo and some of their other creditors. Carvana is soaring. It's planning to sell through 35 million shares, expects at least $350 million in gross proceeds. And check out this one, yeah. This is their interest expense on their debt. And this is where a lot of these companies, right? You know, the zombie companies barely just making enough to service their debt at a very low interest rate level. One of the talks about these rates rising higher is getting rid of some of those zombie companies, which might not be the best thing for the economy in the long term. Nonetheless, that's where you got to restructure things if possible. Too much borrowing proved costly for the company. Interest expense, I mean, you're talking about $19 million a quarter in 2020, and then boom, $160 million a quarter, 2023. 2023 second quarter, 155. Yeah, that's quite a number. The company was able to boost gross profit per unit to $6,520, which was more than double from a year ago. That total was helped by $900 a vehicle in non-recurring items, the company said. Yeah, so they put up some big numbers, and the market likes that they're giving themselves a chance by reducing that cash flow cost. And you're pushing $56 now. Going to be interesting to see what happens here, though, right? You're coming into a high from about a year ago. I mean, if you're in this thing anywhere under here and you didn't get out at $58 and you saw it go to $3, or you're getting out here, it might face a little bit of resistance, man, at this price level, because you just went from $4 to 55 over this period of about 7 or 8 months. Maybe you blow right through it, but look to that price level, because we're going to open literally right to it, to the tick almost. You got a high of 58.05 and you got a high of 57.32. We're trading right now at $56 for Carvana shares. Yeah, interesting. Activision and Microsoft. Activision, they're agreeing to give Microsoft 3 more months to close the $69 billion merger. Seems like this is a green light, so they're just making sure they have the time. The companies will have until October 18th, according to a regulatory filing now. The parties also increased the amount of a breakup fee that Microsoft is going to pay for those extra 3 months. The breakup fee, $3.5 billion, from $3 billion after August 29th into $4.5 billion after September 15th. Seems like it's going to get done, though. The deal, if completed, is going to unite the Xbox console with the publisher of popular titles such as Call of Duty. I assume it's anti-competitive in the long term, man. That's why Microsoft is doing it, right? They're one of the biggest console makers, and they're buying one of the biggest game makers out there. You can't say that they're not going to use that game to try and drive people into their own console. Of course they are, which would be anti-competitive for the other console makers. But nonetheless, that's how business goes, man. And they're paying almost $70 billion for the right to do it. Yeah, and that one's just going to keep playing out, man. Just talking about the FTC here, sought to block the merger, although a California judge last week denied the commission's request to halt the transaction. The FTC is appealing. Stay tuned, folks. We're coming back for the open. Markets pushing 4,600. Stay tuned. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablet as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Higher we go, pushing 4,600 right now, within about a point and a half of that price level at 45.98. NASDAQ 100, we're pushing near the highs of yesterday, up by 42 points. That's a 0.25% in the positive. The Dow up by about 0.3%, up 100 points even at 35,239. Where are we on the Dow? What's the record on the Dow? 36.8. So only 1,600 points away from all-time highs in the Dow. Can't believe we're having this conversation, but it's real, folks. 700 points from the all-time highs in the NASDAQ, and we are 209 points in the S&P. Think about it, that we started hiking March of last year. We're coming into a Fed meeting 1 week from today, and they're still going to be hiking, and the market has pulled back and almost gotten it all back. It's just a remarkable acceleration of turnaround, even as the hiking persists. Expectations are that inflation will be tamed. We'll see where we go. Some of those numbers lining up. Are we going to get back to 2%, man? Where's the Fed going to be comfortable with really pausing for a while or potentially even cutting? Looks like March, maybe the earliest that some of the bets getting placed on Wall Street for that price level. And look at that, above 4,600 in the S&P is just like that. Remarkable strength in these indices, man. Let's jump around to some of the equities with some news. Carvana. So they pull back a bit on the open. Yeah, don't be surprised, man. You know, if you're in this equity, man, and you go from 37 to 60, are you really waiting for 300 again? I don't know. I was out here yesterday saying be careful, though. And the thing traded up 50% practically, so take that for what it's worth. But nonetheless, yeah, trading lower to the tune of almost $10 from where we were prior to the market. We got some selling. Can't blame people taking their money. Goldman Sachs, flat after all that volatility for Goldman Sachs this morning. Trading right now up 58 pennies at 337. And we were talking about some of the debt with Carvana, right? Just jumping around here. Interesting article from Bloomberg. I think this was dated yesterday. When's this dated? Yeah, last night. So I was reading this last night. A $500 billion corporate debt storm builds over the global economy. Now, this is what happened to some degree with Carvana. Carvana, man, the used car, the acceleration they had, the growth that was priced in, et cetera, not real, obviously, and they leveraged things to an absurd level at low interest rates. They got punished for that as rates rose. But what this article talks about, and I'll post this in the Tiger's Den because it's a long one. I won't be able to go over everything in it, but it's an interesting read to keep in the back of your mind. And so they started off by talking to a partner at a top law firm for corporate bankruptcies. He's advised businesses worldwide for decades on what to do when they're drowning in debt. He was in the financial crisis, the oil bust, etc. And you're going to see a lot of defaults is basically the people in the business or what they're looking at. Getting into some of the numbers, okay? You have total outstanding corporate bonds and loans trading at distressed levels exceed $590 billion. Where those lie, real estate, the biggest area, not surprising, right? You got healthcare at about $63 billion. So again, these are corporate bonds and loans that are trading at distressed levels. You got retail, telecommunications, software and services, and then $228 billion is everything else. In the U.S., the amount of high-yield bonds and leveraged loans, which are owned by riskier, less creditworthy businesses, more than doubled from 2008 to $3 trillion in 2021. That was before the Fed started its hiking cycle, okay? So you have high-yield bonds and leveraged loans pushing a doubling level from 2008 to $3 trillion right as the Fed is going to start hiking at a level we have not seen in a generation. And as they say, before the Fed started its steepest rate hikes in a generation. There you go. Over the same period, the debts of non-financial Chinese companies surged relative to the size of the nation's economy. And in Europe, junk bond sales jumped over 40% in 2021. A lot of those securities are going to need to be repaid in the next few years, contributing to almost $800 billion of debt that's coming due. So you just got this storm, man. You got the U.S., you got companies, you saw the free cash flow on a company like Carvana and what it does to their free cash flow on a quarterly basis. We have outstanding high-yield debt. Interest rates rise. They get punished. That debt comes due. They need to refinance. They can't. They go default. In the Americas alone, the pile of troubled bonds and loans has already surged over 360% since 2021. If it continues to spread, that could lead to the first broad-based cycle of defaults since the great financial crisis. I mean, this is why Carvana is trading so much higher today. Those risks on companies like Carvana and many others, you might not have even have to been, from 300 and change to $3. This is starting to happen already. 120 big bankruptcies in the U.S. alone. I'll post this in the den as I'm talking about it. Yeah, 120. I mean, we know some of those entities, right? Bed Bath & Beyond, et cetera. Less than 15% of the nearly $600 billion in debt trading at distressed levels globally have actually defaulted. That means companies that owe more than $500 billion may be unable to pay it or at least struggle to do so. So I posted that in the den. Check it out if you can. It's an interesting one. But there's a lot of stuff looming in these markets, man. You know, if Microsoft is able to continue to charge the prices they're charging, though, for those types of AI Copilot, etc., boy, you know, you're going to see these companies carry the market, folks, because this AI revolution, a productivity revolution, right? They said that the internet was going to steal jobs, everybody's job, etc. What's happened? Productivity has gone through the roof. AI is probably going to be the same to a certain degree. Certain jobs are definitely going away. I mean, that's just the nature of the business, just as they have gone away in the internet to some degree, right? In the age of computers, in the age of phones, in the age of being able to do things online, etc. Those jobs created other places, productivity surging, allowing for profits, which should lead to investments in capital, etc. Excuse me. Okay, this market, man, is not stopping. S&P's up 16, 4604. NASDAQ at 16,007 right now. 16,007, excuse me. Yeah, I was talking to Jacob yesterday. I was even saying, you know, we were doing some work. We were using Microsoft Bing with an Edge, which can generate images. We were using ChatGPT-4 to work on even some code. Absolutely remarkable. I mean, we thought we had it made as kids, being able to Google anything, right? Just the nature of Googling anything. Remember, you used to have to go to a library, right? You have to Google something. That was like the forefront of technology, man. You don't have to do anything. You think of a question, you Google it, you have the answer. This is like to the nth degree. Being a child, you know, whether you're 6 years old, 10 years old, even 2 years old, or 16 years old, being able to use those AI assistants to learn, to code, to create, all that stuff. Just remarkable what that's going to hold for the future, man. All right, let's check out how some of those FANG stocks are doing. We got Apple shares. A little bit of a sell-off for Apple. Surprising. We got Microsoft shares. They catch a positive territory after their acceleration yesterday. Speaking of AI, NVIDIA, they caught a bid yesterday with the market as well. Today, off about 0.5%. After the bell today, Netflix, their numbers after the bell, giving back some of that gain they had yesterday. And we also get Tesla with their numbers continuing to rise, up 0.6%. Stay tuned, though, folks. When we come back, we'll be talking to our man Teddy Kegstad. We'll be talking some currencies, commodities, dollar index right now, back above 100. Stay tuned, folks. I'm coming back with Teddy.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps up 17 points. That's 0.4% in the green right now. We're up, 17 points, 46.04 in the markets. Let's jump over to the dollar index. DXY back above 117 right now. To talk about some of the markets, let's jump over to our man Teddy Kegstad. Folks, you can read Teddy's outstanding newsletter, the Tiger Forex Report. Come on over to the front page of TFNN, right under the newsletter tab. Teddy puts out a new issue every Monday. I always read that one on Monday mornings. We'll talk about some of the price levels he's got in there right now. Teddy Kegstad, good morning.
Good morning, Tommy.
Quite a relentless market to the upside, man. We've had some action in notes and bonds. We've had some action in the dollar index. We're back above 100. Where do you want to kick things off? What are you looking at in this market right now?
Well, I'd say the three movers and shakers in the currency market is the pound, the yen, and the Canada. Which one would you like to talk about?
Let's go to the yen. We got a lot of people that love the yen, of course. I know that's a big one for gold. We've had some moves in there as well. But, yeah, let's talk a little yen.
Well, last week we set a nice little swing low, and that was kind of at the top end of a correction range that I was looking for. The overall trend is obviously a bull, long-term, short-term, what have you. And I think that as long as last week's low holds, I think you have a good chance of seeing the yen probably get back up to that 142, 143 area over the next week or two.
Nice. Now, is that looking for that 142. So I put it up on even a daily, a weekly. I know we have highs recently made above 144. When you're looking at 142, where are you getting that price level from, Teddy? I'm just curious as to how are you looking at that range?
Okay, well, let's just say that the trend is still remaining a bull. Well, then we should be heading up towards that level anyhow. And even if the market is turning, which I don't see it happening because there's no reason to think that the Bank of Japan is going to do anything suddenly that would be kind of like hawkish by any means, if you will. So I think that if the trend was turning, that would be a great correction level to the upside for a sell. So I think either way, whether you're a bull or a bear, you have to gravitate towards that 142 area. Only if the low from last week gets taken out would I start to think that maybe this is I wouldn't say necessarily turning, but becoming a digestive phase for the U.S. dollar yen overall. There's no any indication that or fundamentally or technically that we're going to have a major sell-off in that market.
Nice. How about let's jump to the pound next if we can, since you said that. Let's talk a little pound, sure.
Okay, well, the British pound today, the CPI for the UK came out better than forecasted. I think this is kind of a knee-jerk reaction as far as what's going on with the pound. Overall, obviously, the trend is a bull right now. There's still a lot of question as to whether the BOE is going to, what they're going to do exactly, whether it's just going to raise rates or if they're going to do something else fundamentally that could help support the currency. I mean, their economy is in shambles, and now granted that it beat forecast, but it's not saying very much. It's not saying that inflation disappeared. It's just not going at the rate that it was. It's kind of like how our CPI came out 2 weeks ago, where, it came out, everyone's saying, oh, it's so positive, it's going in the right direction. Well, it's still rising. It's just it's not rising at a rapid rate like it had been, So I wouldn't read too much into it. I think that today's trading is probably due to overall dollar strength. But that's the big mover today, is the big sell-off. So I'd be careful if you were short selling into that move this morning. You might see a little bit of a head fake rally yet with that one still.
Yeah, quite a move for sure, man. You put that short-term basis down to almost just below 129. We're pushing well above 130 on that move. And how about, you mentioned the Canadian dollar? You want to talk about that?
Sure. So the Canadian dollar, let's see, where is it trading at right now? I think it's trading at 130, 160, 163-ish. Yeah, I would watch to see how today happens. If we settle kind of like where we're at or even a little bit lower, I'd be very careful selling it in the hole with the U.S. dollar Canada. Now, overall, that market is in a bearish trend, at least short-term and intermediate. However, the low that was set, it was a good buy signal set last week. So I would key off of that low. If we take that out, obviously the trend, it's a bearish, signal, but without a doubt. However, I think right now that it's stabilizing, and this is kind of going to catch a lot of weak shorts, I think, with their pants down tomorrow. Like if we see a reversal tomorrow in the U.S. dollar Canada trade where we end up having a nice positive up day, I would really think that over the next few sessions afterwards, you'll still see another rally follow through leg higher with the U.S. dollar Canada before it starts to turn back on support.
Nice. And can we talk a little bit of Swiss franc, man? Because I was reading, I know you got a chart of this in your newsletter, of course, as you always do. But boy, my best friend Teddy lives in Switzerland, and I'm going over to Spain. But boy, it's quite a pullback, man, to 86. I remember when we were first talking, it was parity. And you're talking about at 86 now. It doesn't seem like it's going to be slowing down anytime soon. What is going on with the Swiss franc?
Well, the Swiss franc is making me look really good from when we had that end of the year forecast predictions for the overall currency markets. I've been saying for a long time that the trend overall with the U.S. dollar Swiss is now a bear, long term, no matter what the dollar strength comes in on any other technical or fundamental manner versus the other currencies. That's just a trade that's there. There's no reason to think that the dollar is going to really turn against the Swiss. I mean, there are obviously things that can happen. Anything is possible, especially if there's some kind of big economic panic going on in Europe. But unless there's any major changes fundamentally, I think that you have to be a sell rally trader for the U.S. dollar Swiss. Now, granted, it's grinding these lows, and I liked when it kind of like bottomed out last week. I mean, if you look at the trend, it was a pretty severe drop off, and now it looks like more of a kind of consolidation grind lower. And that's what worries me, that no matter what the dollar strength may come in versus other pairs, that this one is probably going to continue lower. Like I think right now you're trading at 85.79. It wouldn't be out of the realm of possibility that before we get into or too far into August that we see the 82 handle in the U.S. dollar Swiss. So.
Yeah, I appreciate it, man. It's pretty, just even taking a look at the chart, you go back, I mean, lower lows, lower highs, right, for the better part of, 10 months, even, yeah, pretty stark. We got to talk a little bit of crude. What do you think of the action in crude right now, sitting at almost $77?
You know what? I think it's in a choppy range trade, and we're kind of at the upper end of the range right now. I don't see it really breaking out to the upside or downside in any big way right now. There's no fundamental or technical reason. It's just it's a drift is what it is. I mean, I'm happy that it's not rallying, but I mean, I think that there's more of a buy break forecast for it. I'd be looking to buy into weakness more than selling into strength right now.
It is pretty remarkable, man. Again, I pull it up, just going back. I mean, this thing's basically been between $70 and $80, and we've had a couple outliers over the course, but since November. So you're talking about, again, 9 months almost where this thing's been chopping around. And
now, if we have higher rates, if the Fed starts to jump on a hawkish thing again, then we might see an uptick in oil just because of the cost to carryover effect that may happen. That's a possibility fundamentally.
Okay. Well, Teddy, I appreciate it as always, man. We look forward to talking to you next week, and we'll talk to you on Wednesday, man.
Sounds good, Tommy. Take care.
Thanks so much. Folks, check out the Tiger Forex Report right under the newsletter tab. I always say, even if you don't trade currencies directly, we see the dollar index, the impact it's having on the markets right now. Teddy always talks about bonds in there as well. And crude sitting at about 77, quite the pullback on the dollar, right? 120. And yeah, that U.S. dollar Swiss, boy, tough to find a bid there over any recent time. From 101 down to 85 over a period of the last 9-10 months. Stay tuned, folks. One more segment. We'll be coming back, taking a look at Netflix coming up for their earnings after the bell. Stay tuned.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablet as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets pretty much where we kick things off on the acceleration higher. We're trading at about 46.04. Yeah, since a few minutes after the open. We see we got up to this price level. NASDAQ 100, a little bit off of those highs. We're up by 22. The Dow catching a bid, up by 0.5%. Russell up by 0.5% as well. 2,000 on the dot for the Russell. Take a look at the Russell longer-term basis. Russell furthest away from those all-time highs of 24.60. Yeah, well off that price tag. What's that, 13% almost off of that price tag versus the other indices. Like I said, stone's throw, man. S&Ps, NASDAQ 100, and the Dow all on a reachable basis, especially when you look at some of the moves we've had recently. Okay, taking a look at Netflix real quick. Netflix trading down by about 0.4% right now. Quite the acceleration yesterday. That's on a weekly basis. Putting it back on a daily. It's been a one-way trip, man. Let's back it up even a little bit more, I guess. One-way trip for the last 14 months, from lows of basically about a year, 162 to 480, and you jump over to the Analyze tab. Their numbers out after the bell, decent move, almost a 10% move priced in either direction. $41 priced in to their earnings event happening after the bell tonight. You jump over to Tesla shares for their volatility. You're looking at about a $21 move priced in for after the bell for Tesla earnings. Tesla coming into those numbers trading up by 1.2%. All right, what else we have going on? How about the heat recently, man? Wall Street Journal, front page of their website today, jet-setting heat. This is the average temperature departure from historic norms for the previous 30 days. Everybody's about 10 degrees above where you usually are. Crazy, right? Arizona, our man Larry Pesavento. Send some white light out to him, man, and some cool AC, because you're talking about 115 degrees. Some of these hourlies, man. It's a dry heat, folks, would be the sarcastic purport. It doesn't matter if it's dry. If it's 115 degrees, man. Check it out. There it is, 115 at 4 o'clock in the afternoon. Midnight, 103. 103 at midnight. 100 degrees at 2 in the morning. So stay safe out there, folks. It is a different kind of heat when you got the Journal covering it on a constant basis, let alone. Stay cool out there, folks, and stay tuned. We got Basil up next, live programming today. Have a great one, folks.